Okay. All right, everybody. I am joined here by Jordan Sauer, and funny he should be on today because we're going to talk about energy, specifically Shell. You guys all know Shell. The reason I say it's kind of a funny time to be talking about that is because just this morning, headlines show that Warren Buffett has bought another double-digit million-dollar purchase of more Occidental Energy. So sounds like I'm not the only one that's optimistic. It sounds like Jordan isn't the only one that's optimistic on energy. So, Jordan, thank you for being here today. And let's talk about this article here that you wrote about right here. Shell, do not fear declining oil prices. So, I read the article, but for people who didn't, kind of tell me a few of the things along these bullet points here. What is it about Shell that you like and that you think people should be keep a close eye on?
Well, like you can see there, like first of all, the price. So it trades at a large discount, even to Occidental, which Warren Buffett is buying. And then, unlike Occidental, you have like this huge, like world-class LNG business. You also have a renewables business that's growing at more than 100% per annum. And then the balance sheet, I calculate there's about $30 billion in excess cash there. So when you take like the normalized earnings of Shell, it's really trading about a P of 8, which gives you like a 12.5% earnings yield. And I think it's becoming more and more resilient to like low oil prices
Hmm.
because they've actually been divesting like some of the higher cost assets, which gives them like a $30 per barrel Brent crude break even. Um,
That's a lot of very good points, all in a very short amount of time. That was something that I've noticed a lot in the energy sector, especially post COVID, is that they've had a ton of extra cash on hand. They've been taking a lot of that, and in fact, let me pull this open. I pulled open Shell right here, and I'm not sure if you're familiar with Qualtrim, but they've got some really nice visuals on various stocks that you put in. And kind of like you mentioned, not only can you see their cash flow increasing a lot, but where was that? Yes, the debt. You had mentioned their cash on hand is exploding upward. And
yeah,
like with a lot of these other energy stocks out there, you can see typically these are massive debt. Like back here, 2019 before COVID, a massive amount of debt, not as much cash, but you can see all this extra windfall of cash. They've been paying off a ton of debt
that's
and also increasing dividends. And that's kind of a story you're seeing across with a lot of these different energy companies as well.
Yeah, that's the other thing is the debt keeps coming down, the dividends keep going up. They're going to buy back, I think, $5 billion in stock by the end of the year.
Hmm.
So you got all these things supporting the share price here, and even if oil prices are much lower, I think you're still getting like $20 billion of cash flow.
Yeah, that's so true. I think most energy stocks, correct me if I'm wrong, I'm pretty sure most energy stocks right now can afford that 30-ish dollar a barrel range and
Yeah.
not even break a sweat. Um, tell me, okay, so tell me, you did a write up about Shell's 2023 Capital Markets Day. What did you learn when you kind of analyzed what they were talking about at their Capital Markets Day?
Well, I think there's been a lot of heat around the management at Shell, and they're in a difficult situation because with European regulators, they're trying to make them reduce emissions. So to do that, they've sold off the higher cost oil assets, which is actually making them more resilient. Um, and then you have them. I think I've looked at like lots of companies across like I've looked at companies in China and in Brazil and in Japan. And I think that Shell's management team is like one of the most shareholder friendly management teams I've seen outside of the United States. Like we look what they're talking a lot about reducing their costs and improving their efficiency.
Hmm.
Um,
Now, a lot of people will kind of criticize how much of the renewables they're trying to get into, or just really anyone in the world of energy. Do you think that's a fair criticism, or do you think that there's actual some potential serious profit in this divestment away from the fossil fuel space, since that's kind of been their bread and butter for what 100 years
yeah,
or so?
yeah, and it's really like separating the ESG investors and the energy investors to the point that nobody wants to touch Shell. and that's why Shell is so cheap. But I think what people don't realize is Shell's revenue has been growing in renewables at more than 100% per annum. They now have $60 billion in revenue just from renewables. And they have like 45,000 service stations. So um, when they put EV chargers in at all those service stations, they can actually they get about double the revenue from customers who drive EVs because they spend so much time at the station. They buy cigarettes, they buy drinks and food, and all of that like contributes more to those revenues growing. And then they're also looking at like electric utilities, hydrogen. Um, all of these things are going to keep scaling fast. So I think if we look out to 2030, the Shell is going to be in one of the best positions among the oil majors with this renewables business. I calculate it could make $10 billion in profit by 2030.
No kidding. Now, I can't remember. I'm scrolling right now to pull up. I don't think there's any other energy company that's seriously putting any type of energy behind, and no pun intended, but this much energy behind renewables. Is Shell putting the most behind anyone right now?
I think so. They're Shell and Total Energies out of France. They've really been investing heavily in renewables because of what's happening in Europe. And I think that really we could get multiple expansion in these businesses because they're not just a cyclical commodity company anymore. Like they're a diversified energy powerhouse. When you look at all the offering, everything they're offering with LNG, they have chemicals, they have the renewables, they're going into utilities, they have the EV charging, the service stations. Right now, the upstream business is only 35% of their profits, even during a time of high oil
Yeah.
prices. So this is going to keep their cash flows pretty steady, even at a lower oil price.
Well, and let me go back to this once more. This is the one thing that I think you are spot on with is this one chart right here. It, if they can continue paying their debt down and building up this cash, like most all these energy companies are, you're right. Their LNG business could suffer. Their traditional oil and business, gas business could suffer. The renewables could suffer, and they would still be in a good spot. Um,
Right? Yeah.
Gosh darn it. I was just about to ask you something
Like
about this exact piece, and now I've just blanked on it. So, um, let me ask you one more question about, and this is one that I like to ask people as I talk with people who are writing on Seeking Alpha, because Seeking Alpha has a comment section, and usually on at least, Seeking Alpha used to be kind of a wild, wild west where you could just post whatever and get away with it. But as more people are on Seeking Alpha, more people in the comment section go wild. Have you found anything in the comment section that made you reconsider anything that you wrote or gave you more insight into what you wrote?
I actually like to look at the sentiment in the comments section. And I think when there's a lot of negative sentiment in the comments section, that's a bullish indicator.
Okay.
I had the same experience with I wrote about Petrobras
Hmm.
a few months ago, and there was an election in Brazil, and President Lula was coming in, and shareholders were freaking out in the comments section, and there was almost no good news at all.
Hmm.
That turned out to be a buy signal. I think since my last strong buy article there, it's up 60% when you include the dividends just in a
Yeah,
few
let's look
months.
here. Petra, PBR. Let's have a look. That was, I'm trying to think, that election was about maybe 6 months ago or so. Yeah, so roughly 6 months ago, if we just assume, and there it is, up 50% since then. So um yeah, I
Yeah.
do remember that. I didn't see your article at that time, but I do remember people were panicked. And it's kind of funny, you'll look at people's profile on Seeking Alpha and maybe they average 10 comments at most, but then you'll write one and boom, all of a sudden you've got 500 comments. So yeah, you struck a nerve with something that you wrote. Okay,
Yeah.
last question on the Shell topic. You had said that there are some risks here. Let me go back here. um curious about what risks that you had written about, and one in particular. Let me switch my screen back. There we go. You said although it's got an incredibly strong balance sheet, a great credit rating, and the 30 billion in cash, the returns could be lower than you expect due to some shortcomings on management and regulatory interference. Now, Shell is based out of Europe, not the United States, so there's definitely some regulatory risk. Um, do you
Yeah.
have any idea of what any specifics as far as regulatory risks or management shortcomings aside from just your average millennial who's super gluing their hand to priceless works of art, trying to shut these guys down?
Yeah, I mean that's part of why they trade at such a large discount to something like ExxonMobil or Chevron. So they've been Europe's been more aggressive with telling them to reduce emissions. So if you scroll down to those charts below, you'll see like their production of oil is actually going down, and so are their reserves of oil, and that's because they're trying to reduce their emissions. But that's also making them more resilient to low oil prices. And like if you look at their annual production now against their reserves, I think they have like about 14 years left of reserves, and the reserves are actually growing, so that number is actually going up.
Hmm.
But the real risk would be if Europe makes them reduce emissions even more than they currently are. That would really put pressure on. But they do have the LNG business and the renewables business, and the LNG business made $22 billion alone last year
Mm-hmm. Yep.
because of what's happening in Russia with them cutting off the natural gas supply to Europe. So that Shell's really got something there with the LNG business because they're now supplying Europe with all the natural gas through liquefied natural
Yeah,
gas.
absolutely. I noticed another European energy company, Hess. Hess had a pretty massive year, if I remember it, last year for that very same reason. When all that cheap Russian oil goes away, all that cheap Russian LNG goes away, you've got
Yeah.
Shell and Hess coming in to fill up the gaps there. Um, okay, I think that's about it for right now. Let me show people, if you are interested and you'd like to follow Jordan and his writing, you can find, let me show you your profile up here. Here we go. Here's Jordan's profile. Jordan Sauer is a Seeking Alpha analyst. You guys can follow him. He's got 73 different articles he's written. And in fact, you just did recently this one here about TD versus Scotiabank. So, and again, God, the banking world in Canada, what a strange beast that is. So, Jordan, I appreciate you being on here with me today. I
Thanks
will
for
look
having me
forward
on.
to following you on Seeking Alpha, and if we can make another one of these interviews happen, I'll definitely reach out to you. Um, and if people have other questions, follow them on there, send them a message on there, get in the comments and razz them a bit if you got some questions. But Jordan, either way, thanks for being here today. Okay,
Yep, thanks very much, Ryan.
you bet. Okay.